The US market dropped 2.8% last night following the 0.5% rate cut, but Asian markets were fine today and so were European ones before the rate cut. Now, if you're surprised the New York stocks fell after a cut in interest rates, don't be. The last two times it happened, in October 2008, the market fell on both days. It then fell another 28% before bottoming on March the 6th the following year, of course. But in general, it's what usually happens when the Fed is cutting interest rates. This chart shows the Fed funds rate and the S&P 500 index. Now, it's not a perfect match, but broadly speaking, they go down together, with the Fed trying to get it to go up with lower interest rates. Part of the reason is that investors are flying into the safety of government IOUs, otherwise known as Treasury bonds. Last night, the market interest rate on the 10-year US bond, often called the world's most important interest rate, fell below zero for the first time ever. The interest rate falls when the price goes up, and the price goes up when they're in demand. And when I say ever, I mean ever. This chart of long-term interest rates from the Bank of England goes back to the year 300, when Roman Empire money supply was collapsing and interest rates were apparently soaring. This time, money supply is soaring and interest rates are collapsing. At 2 a.m, our time, when the rate cut was announced, the US dollar fell and the Australian dollar jumped and is currently sitting at 66 US cents. The Australian market closed 1.7% lower, with heavy falls by banks and CSL, while retailers continued to benefit from the great Dunny paper panic. Finally, gold and silver rose today, while oil and base metals fell. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.